Good evening. Thank you for the opportunity to tell our story here tonight. So I'm sure you know we each only have 5 minutes, so it's not going to be too boring. Okay, so just by way of introduction, Petra's got a quality portfolio of assets and a management team that's built up a good track record in delivering on those assets. We've got very exciting growth to come in the coming years, all from our current portfolio of mines that we are operating. We've been achieving, you can go and look at our financials, we've been achieving margins in the 40% region, and these margins will grow substantially in the years to come as we convert our mining from current very mature block caves into undiluted blocks of ground. We've got a very strong balance sheet, and we are starting to pay dividends after our June 15 financial year end. And in our market, we've got very attractive fundamentals. We have seen some volatility, but luckily not the volatility that most other commodity producers have seen. We've more or less seen steady growth over the last 10 years, around about 7% in dollar terms in our pricing. So a little bit of up and down along the way, but very steady growth. So you can see there on the slide the different charts there. All our indicators are thankfully moving in the right direction. See, our production has been steadily growing over the years from 1 million carats to 3 million carats per annum. Revenues from about $100 or so million to just under $500 million in our June 14 financial year end. And very most important, the operating cash flow just under $200 million last year. Okay. So these are the 5 assets that we are operating. We acquired all these assets from De Beers. Many people ask us why would De Beers sell these assets if they are still doing so well. So these were non-core assets to De Beers' portfolio. They only operate the larger open cast mines in Botswana and the north of South Africa. And this is a business model that's been followed very successfully in the gold industry, oil industry, and so forth. So we acquired these assets. We focused on efficiencies. We really pay these assets a lot of tender love and care. And main important thing is we made these decisions how to develop these assets, and we've got the job going. So the last number of years, our financials have shown how successful we've been with these assets, but the best is yet to come. So you'll see this chart then shows you the green line shows the production growth up to 3 million carats last year. 2015 we're on track to produce 3.3 million carats, and then our growth plan on this current portfolio of assets to take the production to 5 million carats by 2019. And the red line, you'll see there the revenues of around $500 million per annum now will grow to just over $1 billion on the back of the additional carats, and that the type of carats that we will be producing will be higher value carats, and I'll show that to you just now. So the bar chart at the bottom depicts our capital spend. You can see we're spending just over 2 billion rand a year in capex, and the one in the middle is showing the 2015 spend, which is now nearly behind us. And then we've got one more year of this 2 billion rand capital spend, and then the capital spend takes sort of like reduces substantially thereafter because of the nature of the ore bodies that we are mining, and we'll show you that just now. The blue line shows you early part of the capex. We availed ourselves to bank finance to pay. See the bar chart sort of like is higher than the blue line, but now our operating cash flow pays for the capital program, and this blue line will keep on growing over the years to come. The company will generate substantial cash flow. So this is the type of mining that we are doing. We mine kimberlite pipes by way of block caving. The upper part of the block is severely diluted. That's where we're operating now, and you can see the new blocks that we are installing. We will be accessing undiluted ore, which will up our margins substantially. So just by way of conclusion then, you can see there currently we are mining around 17 million tons per annum. The tonnages, total tonnages that we mine and treat will stay the same around 17 million tons. But look at the dark blue and the light grey line. The carat production will go from 3 million to 5 million carats per annum all because we are accessing undiluted ore, and we will be sampling the pure diamond content of the kimberlite ore body. Also note that currently the light grey represents carats that we are producing from tailings, old dumps that were treated before. So 1 in 3 carats currently we get from tailings operations, but you see there 2018, 2019, only 1 in 20 carats, 5% of our production will be from tailings, hence the much higher value per carat. So thank you very much.